Hello, traders. It's 8:02 a.m. Chicago time on Tuesday, the 25th of February, 2020. Thanks for joining us on episode number 1699. Just a reminder, yesterday I had the date wrong. I showed February 22nd when it was actually February 24th. Corrected it on YouTube, but not on Periscope. Once it's done, it's done. In any case, derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market's seeing a tiny bit of a pop. Really, the S&P is still stuck in yesterday's range. It has traded its entire range overnight, but overall, the Nasdaq is up 60 points or 0.66%. The pound is higher after falling. It's up 54 pips. The S&P's up 12 and a quarter points or 0.38%. The Dow's up 102 points. Gold is the laggard today. Gold took a huge pop yesterday on the coronavirus news, the spread of contagion of that virus, and it's cooled off today. It's down $22.70, trading at $1,653.90, down 1.35% on pretty decent volume in the futures. Crude oil trading at 51.22, down 21 cents or 0.39%. So the overall allocation this morning appears to be towards risk somewhat. But it's hard to say because with the volatility that we had yesterday, these percentages may just be kind of a little pop in the equities in risk assets, but not really representative of an overall sentiment change. Yesterday left a massive gap above between 32.60 and 33.25, is it? Something like that. And we're trading in range in value from yesterday on a double distribution or bimodal volume profile. In the review segment, I'm just going to cover what things shaped up as yesterday. For those of you who are Convergent members, we did send out an impromptu notice, and we did an impromptu on a reversal trade setup and talk through the breach of the 2375 and push below. I'm bringing this up here because I want to remind you that impromptus do not stay up for more than 48 hours, so make sure that you get to it. There's a lot of information in there. But yesterday, normal variation day down. It looked like it was going to make its way back up, and potentially go neutral. In that case, I would have expected neutral extreme. There was a lot of liquidity up available at 3260, and it held on two tests, one at 3260 exactly, which formed the IB, and then the second one a tick below. There was some aggressive selling in that area, and the expectation was, well, it took out the mid, which is this blue line, took out the mid. And if it continued to push higher, that push through 3260, very, very likely to finish with a neutral extreme up, which would set us up for a push into 3300 and a climb. But the market wasn't able to do that. Volume was quite high yesterday, about twice what we would normally expect, and the high volume persisted throughout the session. You can see against the average, these are averages, 20-day average right here for this block, this periodicity. This is a 15-minute chart currently. The averages are shown in black, and then the actual is the bar. And the bar is colored as far as volume, this bar versus the prior bar. Is it higher, is it lower? And so you can see throughout the session, The actual was well above the 20-day mean, and so there was quite a bit of activity. Very welcome. Yesterday also saw a big 10-point pop higher in the VIX. We don't see that often. It has occurred on really big selling days, and yesterday joins those ranks in terms of having that big a move in the VIX. So that's where we stand. Again, we had a gap situation. We had a responsive. If we look at if we look at how the day started, just because I did not do any scenarios yesterday. It tested down, drove up. This is an open test drive. You don't want to fade it. And it continued to rotate higher on the buy side than the sell side. And then this is the first chance here with a negative delta. First chance for the reversal trade, and we get this impulse down, really big rotation down, and then we pull back to about the mid of this rotation, consolidate, and then we continue lower, finally breaching the IB low. And then from there, we carried into almost to the low of the gap zone, which is at 32.1275. We stopped at 32.1375, so the gap zone stays open down here from December 20th. And then from there, the market decided to rotate up, and then it just could not hold on, rotated down. So quite a wide-ranging balance yesterday with a value area that is valid. It's bimodal. It's got two kind of distributions in it with a point of control below the IB, so it has a skew to the sell side. Yesterday's close had a skew to the sell side. It was below mid, below VWAP, below the IB, and the VWAP, the VPOC is below the IB as well. So the market's accepting prices lower in either case, given that we have this gap. But we didn't fill the gap in the first hour, and then there's a historical probability that it's not likely to fill. Again, past performance is not necessarily indicative of future results. So that's where we stand today. We're opening in value, in range in value. And so we have to pay attention to the 48 above and the 23.24 below as the value edges. Here's what the market profile looked like yesterday. We didn't have very much of an excess at the top. We have a bit of an excess at the bottom, and the value range is a lot wider. Goes up to 32.50 or something like that, 32.50, and it's skewed a little bit higher. But I'm more for volume than I am for these TPOs, the market profile, because I can accurately see what the interest is in terms of volume at each price. So yesterday had some pretty big rotations. The rotation, the common rotation expanded to about 5.5 points for the session, so stops had to expand, targets had to expand, but overall, pretty decent price action-based trading yesterday, in my opinion. Then we carry that into the overnight session, and the overnight session opens up and tests that low, misses by 2 ticks. Then it runs the other way, tests the high, misses by 2 ticks exactly. And then there's an opportunity here to pull back. This is a pretty decent impulse up. It's not really impulsive behavior. It looked like a 15-minute bar grind up, and it looked like it was pulling back, consolidating, flagging for a continuation higher, and it was just not able. And again, once again, like we saw yesterday morning, it makes a run for that high, and it's not able to get there, and it lets go and crosses all the way to the other side. We're currently in the middle. We've got the point of control and the mid on top of each other. and the volume is very high, very, very high at 749,000. Not as high as yesterday, but positioning is quite active. There's money moving in and out of the market currently, and to me that creates opportunity for gains and higher opportunities for losses as well. So we're, mid point of control in the same spot, a multi-distribution profile, really. It's a weird looking profile, but overall it looks like a active price discovery with the market holding steady in the middle. So it'll be very, very important to watch this morning following yesterday's action. It'll be very important to watch to see which side is likely to tip. So today we want to see how the market responds, and that's likely to carry into the rest of the week. Another thing I want to point out is yesterday, close to close, we were down 113 points. That's about two weekly ranges, 113 points. And the last time we were down here, again, take this with a heavy, heavy grain of salt. The last time we were down here was August 5th, 2019, where we had that big of a move down. I think that day had, let me pull it up as I was looking through, 103. So we're a little 10 points over from close to close yesterday. And what happened that was August 5th. On the 6th, the market closed higher by 47.5 points. On the 7th, it closed higher by 4 points. And then on the 8th, it closed higher by 60 points. So it ended up migrating up 112 points after the big selling day in August. It's not August. We're not in the time machine. We can't go back there and trade it again, unfortunately. So don't put too much of a correlation. We still have to pay attention to whether or not the participants today take us higher. And if they do, and it seems aggressive, we can expect to project 3,300 from here, which is about 70 points, and potentially get that. Here's what the order flow situation looks like. You can see that there's somebody stepping in here in the 50s. This is kind of expected mid-century figure. At the 50s, there's a little bit of liquidity remaining that has remained intact here at the 60. Remember, the 60 was where yesterday's high was, and yesterday had quite a bit of liquidity in that 60 price the entire session. So just a quick, glimpse at this chart already tells us that that the liquidity skewed on the offer, and given the way it's positioned itself, the expectation is for this to start to float up on the open or sometime after the open. So that's the posture that I think the market is likely to be in coming in. Beyond here, just looking at the depth overall, again, liquidity is heavier on the offer. Beyond there, 65, you can see 65 is relatively heavy up top. There was quite a bit of liquidity sitting in this area, but then it tapered off between 65 and 70. Not sure what's going on there. This is an old gap zone, but again, looking at 50 to about 53 and 65 in terms of liquidity, and below us, really, there's not much until the overnight low, which is close to yesterday's low. There's not much there in terms of resting liquidity, and the way the market has been trading overnight is it's kind of it's not really seeing clear collisions or anything. It seems like the bid and the offers, you can see it's a lot of dark space here. There's not much in terms of collisions and aggressive activity against liquidity in the market. It seems like they're leaning on market orders more than playing with the liquidity in the book. So I'm expecting a lot of algos are likely not to be active this morning, and I'm expecting it to be the open to be thin-ish and quite directional. So that's where we stand there. Let's clean this up a bit. Yada yada. Let's look at the current situation and what we're expecting for today. Given the stance that we held overnight, where are you? Given the stance that we held overnight, here we are on top of the point of control, mid of the overnight session. We're in a crowded area between this 41 quarter down into 38 and 37 with the overnight point of control at 38.50. There's a lot going on in this area. I'm expecting a little bit of turbulence here as we open. I'm looking for it to test down, push lower down into the 3230 area, but eventually I'm looking for the market to stabilize and start to squeeze up. So the test of the point of control, if it doesn't bounce off of the point of control immediately, these are the two key prongs here, the key prices yesterday. If it doesn't bounce off immediately, then we have what is scenario 2, which is to take out the low and continue a little bit lower, seeking those buyers. But on scenario 1, I'm looking for it to dip, find buyers, rotate up, move into the value area high, consolidate, and then eventually squeeze higher into the close. This is what I'm looking for today. The overall picture is we are in the balance zone from December. I mean, yesterday that big move really just wiped away what most of February and January's gains. It really isn't that big. It's a relatively big close and movement, but it's not that significant a move really. Secondary open auction makes an attempt higher, impulse is down, goes back to where it opened, returns, gets into the point of control, consolidates here, attempts to bounce, and loses it, and starts to move into the prior low. And the area that I expect to be a key test area below is 3200, which has quite a bit of volume. Quite a bit of volume in the past there, a lot of interest in the past. It is a century figure at 3,200, but you can also see the MC or the composite point of control here. So once we get below this 12-ish area or 13-ish area, you can see in the profile here, it's very, very thin, and it's likely to continue lower. Those are the two key scenarios. I'll leave you with that. I've rambled on quite a bit. There's a lot going on in the markets. Good luck today. Remember, risk comes first. If you're not managing your risk, you're not going to be here tomorrow. So make sure you understand that these are leveraged products and to put risk first, right? Trade the micros if your account is smaller than one full initial margin per contract. I suggest you move to the micros. Good luck.